Welcome to the video about drawing trend lines using Technician software. Technical analysis has many objective rules and techniques, but it all still depends on the subjective interpretations of the analyst. For example, after a market establishes a support level, it trades one or two ticks or price units below that level. Is that considered a break of support? What if it traded below support for only a brief time and then bounced right back up? The analyst must use other indicators and rely upon experience to determine if this is a real signal or just noise. If support and resistance line contain a trading range, then trend lines are simply rising or falling support and resistance lines that contain a market move. If the market is falling, then the resisting trend line, the one on top, should stop any rallies going against the primary trend lower. In the chart we have here, we have the silver ETF from mid-2010 to early 2011, and it was hard to argue with the rising trend, even when several sharp reversal bars threatened it in November and December. The trend line starts at the bottom in August and runs through several interim lows along the way until finally breaking down in January 2011. As the market trades higher, some market participants will eventually decide that it has become overvalued or expensive, and they begin to sell, and that causes the market to pull back a little bit or retrace. And eventually this counter trend decline loses its power, and everyone who was going to sell has already done so. The buyers once again take control and the market resumes its advance. Recent sellers also reverse their position, seeing that they were wrong, to add to the buying pressure, and the trend continues. This sort of trading activity is exactly what happens at a support level. Since a rising trend line provides support, it should then be drawn from the recent low, again seen in August, and extended through the first significant pullback, which in this case is in October, although it was a little hard to see at the time. The trend line is extended higher as time goes on. However, sometimes small violations of the trend line force the line to be redrawn lower. When to do this depends on the skill and the risk tolerance of the analyst. However, when we look at the chart, as drawn, we can see quite clearly where the trend line should have been drawn. It just becomes dicey as these failed breakdowns occur in real time. Just as with horizontal support and resistance levels, the more time the market touches them, the stronger they become. Further, the stronger the trend line, the more significant the signal is when the market finally penetrates them. All of this leads to the famous expression, "the trend is your friend." And once a trend is established, the trader buys or sells accordingly. He does not take the opposite side of these trades until the market tells him to do so. In other words, when the trend is broken. Within any trending market there are counter trends, and within those counter trends there are even smaller ups and downs. This is how a market, such as stocks, can be in a bull market for a decade or so, and then suffer the counter trend decline of October 1987, or the multi-month correction in 2011. For those who study market history, even during the former's huge one-day drop, the market staged an impressive counter-trend rally near the close of the European trading day. Markets usually don't provide textbook examples. Sometimes the first trend line is set and then repositioned later. And as mentioned earlier, the market will then just continue its move, just at a different pace. Sometimes the market breaks through a trend line only to trade back as if nothing happened, such as right over here. Remember, the market does not follow what the analyst says it will do. Rather, the analyst attempts to put down on paper or screen what the market is telling him or her. Sometimes this interpretation is based on incomplete information, and the option to modify any rules used must be on the table. Again, they are the analyst's rules, not the market's. So here we have the Russell 2000 ETF with an established trend line from December 2014. After a significant pullback, that's probably off to the left of this chart, but it was soon overruled in January 2015 with the next dip. The first trend line is not drawn to avoid chart clutter, and that might be a line from here up into here, or from here through this point. So in other words, back in this time frame, we did not have the trend. We did not know what the trend was going to be. But after this, and this acceptable violation, which we'll get to in a minute, we then knew what the trend was, and certainly by April we knew that this was definitely a rising trend, and we would act accordingly. So what is an acceptable violation? As you can see, We drew the trend line through this first dip here because the trend line that might have been drawn here was violated with many bars, meaning that it was just not the right trend line to draw. So here we say, well, did this happen again? Do I have to redraw my trend line one more time? Well, look what happened on this bar. It opened above the trend line, made a low below it, and then closed right back above it. So it reversed to the upside. So at that point you might say, perhaps this was not a trend break and we'll leave the trend line alone as it was. As you can see, moving along in time, that was the right decision, until finally it broke down here in late April. We can see that the trend line touched the market here the day before the violation, twice here, and a few more times before it broke. So we know that later in this trend, after we knew the trend was established, we were confident with what was going on here and we knew what to do if and when the trend line broke. Early in the trend, obviously not so much. We did not know what the trend was. So in art, there is artistic license. In journalism, there is journalistic license. And so too in charting, there is technician's license, the ability to bend the rules so that the analysis makes sense. Just be careful not to bend the rules to make the market fit your own preconceived opinion.